Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, December 22nd, 2009. Well, folks, once again, the markets are floating to the upside. No surprise there based on the light volume we're experiencing pre-Christmas holiday here in a few days. Now, again, the methodology dictates that when you have light trading volume, especially into a holiday session or a holiday period, you will generally see sideways to upside bias in the markets. That continues to hold true. Now, the reason being is you have that euphoric sense. Everyone's happy about the holidays. Lighter volume, generally, as I mentioned yesterday, dictates that you'll have people not trading, at least the hedge funds and the mutual funds, not trading as much other than the individuals, which are naturally going to be positive. Therefore, they are looking to buy into the year end as well. Plus, you also have window dressing, which can be institutional volume, although we're not seeing a lot of that yet based on the light volume. We've traded about 55 million on the SPY today, and look at what the market's done. Essentially, you're looking at the SPY here. You had a little bit of that initial buy program to start the day. We had the same thing yesterday, as you can see. So there's someone out there that is making sure the market gets off to a good start, and then the light volume takes over by about 10:30 in the morning, and you just kind of go sideways. Same thing happened yesterday. You can see from that push up into 10:30, you basically just chopped around the rest of the day. Same thing going on today. Push up into 10:30, and look at the market just kind of going sideways to up as we head up into the highs of the day or towards the highs of the day here, up about 51 cents on the SPY. The Dow is up 60 points. The Nasdaq is trading up 15 points, and the S&P 500 up about 5. That's basically a 0.5% across the board. So you're seeing continued gains, and we do expect that to generally continue into the end of this year over the next few days. You'll have a couple pause days or small down days, but overall, you have to continue to see that bias to the upside, neutral to upside bias going into the end of the year. Okay, now a couple things to talk about here for those of you that understand or are premium members out there that are watching this free intraday analysis video. You have to understand that you can see and analyze this market based on confirmation. The market pushed above the yellow line, now the orange line. Yesterday we could not confirm above it. See, there's no confirmation each time you sold off down here. Now ultimately today you gapped above it, you looked for confirmation, you ended up getting confirmation above the orange line on this candle. That dictated that the orange line now becomes significant support. Does that work out? Let's do a test case. As we sell off into this orange trend line, does it hold? Absolutely, it does. The in-the-money stocks confirmation signal continues to show you that it works pretty much 90 to plus percent of the time. I mean, it is amazing how often this works. It worked all day yesterday. Everything went perfectly yesterday. Today, again, it shows us that it continues to work nicely. So there it is again, right off that orange trend line, which is dictated as major support then based on the confirmation signal. And that, sure enough, that's the buying opportunity there. Look at the move up. And I talked about this in the chat room. This would be a major support line. And again, some of the chat room individuals played that beautifully and are really reaping the rewards of some good holiday cash going into the end of the year now based off of that. Right up it goes. It's really tracking the 20 moving average, then breaks above. Now you're seeing a little bit of a stall come in as you get towards the highs of the day. So there's your confirmation signal working 2 times, one to the upside there, and then telling you that that'll be support, and sure enough, that's support for the bounce. Now, a couple other things to go over. Number one, the 112 level is obviously what you came up to here. You can see the dotted trend line. You came right below that level. That's your resistance level. You came up right underneath it. I would expect that to be a nice double top resistance area as well. If you get through that, you're looking at the 112.30 to 112.50 level past that 113 on the SPY. Resistance, those are your resistance levels. On supports wise, you're looking at the 20 moving average right here is minor support because you chopped around it multiple times. If you get through that, the orange trend line still is support. In addition to the 50 moving average is right there. Below that, you'll have gap fill at this line right here, which is where we essentially closed yesterday, and that is trading at a price of about 111.30. Through that, you'll have the 200 moving average at approximately 111, and then down to 110.85 as your next support line, which approximately 110.80, 110.85 is gap window here as well. All right, overall, I do not expect those levels to be tested to the downside past this level. I think for the most part, you may test this orange line again, maybe the blue line, but ultimately, I do think that there's probably a higher percentage chance that you stay up in this upper range and possibly even go higher today based on the light volume. Again, really unbelievable how light the volume is here today. And again, again, you generally expect it to be lighter, a little lighter tomorrow, although we'll have some economic news tomorrow that may give us a little bit of a jolt early in the day. The economic news that did come out today, folks, was GDP, and this just ruffles my feathers, and I'll just be flat out open and honest with you guys about this one. The GDP number was revised again for the second time down. Ultimately, and originally we got that GDP number, which was very, very healthy. That was quite a while ago. That was the third quarter initial GDP report. Came out 4% plus or whatever it was up there. Then it had a revision about a few weeks ago to a month ago. We had a revision number, and that was down into the threes or the high twos, and then we got even more of a revision down today to 2.2. Essentially, 2.2, folks, means that the government initially, when they reported that number, inflated it artificially. That bothers me. All right, we talk about how these numbers that the government reports, chances are they are not true to begin with. This shows you 100% that that is true. All right, regardless, to revise a number down that much on GDP is ridiculous. Absolutely ridiculous. All right, a huge revision. Ultimately, you go from a number where it looks like the market or the economy is growing in a very substantial manner to where you're going to have a job recovery to finally now we're at a number at 2.2, which is no job recovery. Ultimately, a 2.2 number is not going to give you any substantial job recovery if you maintain that growth. Now, again, we're going to get the fourth quarter GDP probably out next month in January, late January or thereabouts. You'll get your initial number out. That probably will be inflated ridiculously. Again, probably 5% or so, I would guess. By the time they revise it, now you have to anticipate the revision number will probably bring you back to about 3% or 2.5%. I mean, that's just the way it is. You have to discount these numbers. Unfortunately, the truth is really hidden at this point until you get those final numbers. And I don't even honestly probably believe that those final numbers on GDP are actually the real numbers. They're probably even a little bit lower. But that's the number that we're getting as our final number, okay? So just keep that in mind, folks. You can really see what's going on in this realm, and it's not pretty ultimately. Not very happy with that as it continues to be the case. And that's the problem, folks. I mean, you get these jobs numbers out, unemployment numbers out, you get these, growth numbers out. Do you really believe them at this point? Probably not. Regardless of that, it's our job to just trade the market and swing trade it. That's what we do. Had some fantastic calls recently in the chat room and in the research center to our research center subscribers. Just unbelievable calls, whether it's the GLD, whether it's the USO, whether it's ExxonMobil, whether it's Potash. Nailed all these calls in the last few days, folks. Unbelievable money being made left and right just following the trades. And again, it's very, very easy to utilize the Research Center. $49.99 a month. Unbelievable value there. There's no reason just off of one of these trades that you shouldn't pay for a year of the Research Center and just one of them, let alone ultimately all of them together if you were to catch all of them. All right, folks, have a wonderful rest of the day. We look forward to seeing you as part of the Research Center towards the end of this year as things will continue to be volatile over the next few sessions. I do anticipate based on the light volume, and then ultimately the new year is going to bring some craziness involved, so be ready for that. Have a wonderful rest of the day. We'll talk to you tomorrow. Take care.